Hey folks, we are Tuesday, the 2nd of August 2022, and a pretty quiet day on the data slate ahead. Day off bank holiday yesterday in Ireland for me, so back on the desk now. And yeah, we've slid off the edge of a table on oil. The dollar continues to weaken, and equities pretty much holding the highs that they've achieved from last week so far. So, getting over onto these charts. We're going to look at oil, we're going to look at the SPOOs, and we're going to look at gold here as well. So, starting out with oil, seeing where we are on the order of things on the weekly bars. Let's just get off a bit of this so far. Essentially, from those arrows I just deleted, we were looking at dip being bought here on oil, and then but largely we're basically sideways compressing here between what is a baseline of 84s up to probably 115s, let's call it, this very tight range. So can we break out? I think we can, not without a pullback onto what it would be in and around the 50 weekly moving average below, or exponential moving average below. But I think generally what seems to have happened yesterday was we came off on weak manufacturing data out of China, on what would have been the overnight. So selling hitting the tape there yesterday pretty aggressively. You can see if we go back now onto the 60 minutes, the selling pretty much aggressively coming in at 9 o'clock there. They'll pull back onto this trend and then bang, down we go, reaching the 2011 and 2012's lows at 96.11s, which held up the market there last week pretty much on Thursday, bring us back into the new high on the week. But back again, so we're just kind of just working in this range pretty much in oil, as I've said. There's your kind of generally, here's your kind of range here, um, down to about there. So you know am I bearish? No, I'm not bearish. Technically and fundamentally, this thing is tight. Um, and I just think any dips will be bought. The bigger the dip, the bigger buying reaction. But for now, we have this sideways compression. With the sideways compression after that selling yesterday, this does look like we will fall out to the downside. I think if we do pop to the upside, that it will be a bit of a fake out. So that means we have to come down here onto 90.51s, which is the Russian invasion top back adjusted. Have we been below here? Of course we have. When I was away, I think it was on the 14th, we slipped below this price. You can see here, holding up quite well there on the session on the 14th of June, or sorry, July, holding quite well throughout that session, and then just getting walloped there at about, on the pit open, 2 o'clock, and quickly recovering then to have a pretty decent reopen, and put in sort of new highs on, I think, the month at that time, or sorry, not on the month, on yeah, well, actually, no, sorry, it is for actually it's not on the month. But to put in these highs here around 101. So, I think, can we breach? Yeah, we can breach 90.51s. Are we likely to? Let's see when we get down here. Let's see what sort of support we have. So, all right, that's coverage on oil. Again, today, pretty quiet day. Bigger events to come throughout the rest of this week. Um, so yeah, that's oil. I think generally we're protected by the 85s below here, and talking with some oil producers in Texas, for example, over the weekend, friends of mine, they're saying it's pretty much 150 is inevitable. It's just over what time horizon will that happen? And yeah, and I mean, they would know more than I would, as they are producing barrels. So, I think fine. We just need to wait for that. So this 50 weekly EMA seems to be supportive for that trend so far. So, all right, that's oil. We'll leave it there. Looking at the SPOOs so far, talking about this being, holding on to, the gains from last week. Certainly had the tone last week that the dip was bought. We popped here Tuesday above the 39.15s. You see that area there, and then bang, up we go. 3 days in a row. If we kind of lock this in, you'll see that that area really goes back to the highs here. The highs of the 16th of February 2021 is the high in that area, and the low is the low of the 25th of January, February, March 2021. So, lovely area to be looking for the longs here, and we certainly were on these longs last week on equities. So we've come quite far, just taking a little bit off the top here. Daily bars. So we got the 100 exponential moving average as supports below. It may not be that clean a support. It looks like to me we're going to be getting now the 20 crossover on the 50, crossing above the 50, and so therefore the market will want to come back and load up some buyers there before going much higher. So, will we get really strong support in the 100 EMA today? I don't know. I don't think so. We certainly have seen it here on the 60-minute chart. Yesterday, or sorry, on Friday, little offer down onto that 100 EMA, and then bang, closing into much higher highs there. So, can we see that same support today? I don't know. We still have this gap open, 40.77s and 3/4, for that to close. And then we can talk about looking for the longs, I think. So we have seen, on other equities markets, closing up these gaps and then tag and go. So let's see what we can get there. A failure here would probably not be a short I'd like to be chasing. I'd rather let that break and then look to, come back probably in the next session to look for suitable shorts, sell any strength, if we are giving it up. And again, sitting in with that thesis that we do need to kind of come down and trade onto that 50 EMA, or 20 EMA, crossing over the 50, before then looking for the long. So, lots to think about there on equities, lots to think about. And then what else are we going to look at? I think we're going to look at gold. And so gold has been a nice little swing trade for us in the room. We're buyer down here on the trend, selling some up here, 1800s. I like this trend, or I like this trade actually to be now looking to buy a pullback and then swing this thing. And I'm actually buying this on a Q23, 2023. So that is going to be your August expiry, 2023 contract, so that you can stay in that futures contract and ride this thing over the next 12 months, essentially, and get further up here instead of having to, roll out of your contract, as the quarters go by, as gold does roll quarterly. So, yeah, I like gold now. All of a sudden, after 2 years of hating it and losing quite a bit on gold, I like it again. So we're certainly revenge making our money back at the moment on gold. So, all right, that's it. Bitcoin, not much to talk about really at the moment. It's just kind of in a bit of a doldrums after FOMC and the GDP prints, where it did find strength and 10% up days. So, yeah, all right, that's it for now. Equities breaking back down here on the US. We have a quick look at the Nasdaq, because this tech story in Taiwan. Of course, Nancy Pelosi landed in Taiwan. We're getting minute by minute updates. We're waiting for China to do something in retaliation here. And I think tech is going to really suffer, should there be retaliation from BBC, or so, well, not the Public Bank of China, but the Republic of China. So yeah, look, we're coming back. For example, that's that equities type of market that I was talking about, where we tag the gap low and then bid back on up. So we're going to keep this area on our charts for now. So I like the Nasdaq even on a pullback to 12,701. So let's see though, notwithstanding headline risk. All right, that's it for me for another pre-US session. If you haven't joined the room, you've no excuse. Free code for 1 month. So do get signed up, join us, see what we do, see how professional traders trade and operate every day. And yeah, it'll be great to have you. All right, have a good session. Talk to you tomorrow.